All right, so you want to purchase a home. I have a pleasure of working with a lot of first-time home buyers who are thinking about buying a house and they don't know the process. So we have a conversation where I kind of talk them through a quick version of the home buying process. So I thought I'd make a quick video to talk about that right now, where people can kind of easily reference back to it. So the first thing is, how are you going to be purchasing the house? If it's not with cash, you're probably going to be needing a loan. You're probably going to be needing a mortgage. And for that, you're going to want to talk to a mortgage professional. Whenever I work with a buyer, I usually have a couple mortgage lenders that I recommend, and it depends on their situation. There's FHA, conventional financing, VA financing, USDA, renovation loans, and even other kind of financing. So depending on the person's particular situation will depend on what my recommendation is for them for who they should talk to for their financing. And then it's very important for this to be the first step for them to talk to a lender to find out if they're pre-approved. One, to find out if they're pre-approved. The lender might say, oh, you're not ready yet, you got to do this and that to get yourself ready for financing. And if so, then now might not be the time to be looking for a house. But if they are pre-approved, we want to find out for how much. I've seen people that have started looking at homes, hadn't talked to a lender yet, and found out that they actually got pre-approved for less than the homes that they were looking for. Or other people that started looking at homes and they weren't finding anything that they wanted and they got discouraged, and then they talked to a lender and found out they could actually get pre-approved for higher than what they've been looking for, and they realized there's a lot more options for them. So let's say you talk to a lender, you get pre-approved, they're going to let you know what your estimated down payment and closing cost responsibilities will be, as well as your monthly payments, what they should be based on that purchase price estimated. And then also they're going to give you a pre-approval letter so that when we look for the house and you find the house that you like, if you like it, and maybe there's other people that like it too, but you'll already be ready because you talked to that lender with a pre-approval letter to be able to start the process of submitting an offer. When you go to buy a house, you're going to need money. Let's say even if someone does a down payment assistance program where they get this program and they don't actually need money for down payment, and we negotiate some of the closing costs for the seller to pay. Let's say the person can actually close and they don't actually need to bring any money to closing. Even in that situation, they're going to need to be prepared with some money. Some of the things to think about will be money for a binder deposit, which we'll talk about in a second, money for a home inspection, and money for appraisal. So a binder deposit is, if you're financing, typically about 1% of the purchase price, or kind of a base amount that people, some sellers and agents will usually accept is maybe $1,000, if somebody really wanted to kind of come in low. And then I've even seen some people negotiate $500 as the binder deposit. It's all negotiable as long as the buyer and seller agree to it. But typically, sellers and listing agents who are selling homes are typically going to want to see a number of at least 1% of the purchase price, or maybe $1,000. So that binder deposit gets held by the title company, and that's binding you to the contract saying that, hey, I'm going to purchase this home, and if I just turn around and walk away tomorrow, then I'm risking forfeiting my binder deposit. But there are contingencies, which we'll get to in a second. The second step is the home search. So for the home search, we talk about what kind of home are you looking for? How many bedrooms, how many baths, townhome, condo, detached single-family home, garage, fireplace, all those things. And then we'll do a search. And I'm a part of the member of the Association of Realtors, and we put all of our listings on the multiple listing service. And that's where if one of my customers is looking for a house, whether it's listed through my company or some other brokerage, we'll do the search and we'll find all the homes that match what you're looking for. And then also I recommend people to check out my website, which is dandandan.com. Pretty easy to remember, dandandan.com. And that gives you, it gives a feed from the multiple listing service as well, so that you could search homes there, whether it's listed by my brokerage or another brokerage, they'll all come up and I'll be able to help you with those homes. So doing a search, finding a house, going out, looking at some houses, and then we find the house that you want, then we're going to want to make an offer. I know my handwriting's bad, but these notes are keeping me alive. So making an offer, to do that, there's not a one-size-fits-all. And I bring up, I've heard where I've worked with customers and they said, oh, my uncle said that no matter what, always offer $10,000 less. Or they told me that always offer 10% less or 20% less or something like that. There's not a one-size-fits-all for every single house, every single offer. What I mean is that when you could see a house and automatically think like, oh, I always got to offer less than what they're asking for. but we might find it's actually listed at a very reasonable price. And while you're trying that strategy, somebody else is coming in, sees the value, and instantly jumps on it and gets in it. Now, alternatively, sometimes it might be a house that's like, oh, you know what? It looks good and you feel like the price is right, but when we look at the sales, it actually should be less. So before you make that offer, we like to look at the recent sales and figure out what the price should be on this house. And then even from there, even if the price should be here, you still may decide to come in lower, but at least you're doing that based on an educated view of what that house is worth. Let's say that we make the offer, we negotiate it, it gets accepted. The next step is putting down your binder deposit. Like I said, the binder deposit is going to be submitted. Usually, it's going to be held by the title company facilitating the closing, usually, sometimes by brokerages as well. But they'll hold the binder deposit through to closing. It could ultimately be used towards your down payment or your closing costs. And again, the binder binds you to the contract. So if you just back out and decide, I don't want to buy a house, or I'd like to buy a different house, you're risking losing that binder deposit. Second step is inspections. So like I said, you do have contingencies. You do have outs for the contract where you can get that binder deposit back. One of those is the inspection contingency. So if you do a home inspection on the house and you hire certified inspectors and professionals that know what they're talking about different aspects of the house, many times it's an overall home inspection. You probably want to also have a WDO inspection, which stands for wood destroying organisms, to confirm if there's termite issues or wood rot and other wood destroying organisms. And then depending on the house, if it has a pool, you may want a pool inspection. If it has a septic system, then you probably want a septic inspection. If it has a well, you want a well inspection. The average house, you're going to need at least a home inspection and a WDO inspection, but based on the house, it may, you might need to bring in other inspections. Typical general home inspection is usually going to be $400, up to $1,000 or more, depending on who you hire. But I've seen some reputable home inspectors that start around the $400 range. And then plus those other inspections would have different costs. All right, let's say that you do the inspection and you find out that the house is a nightmare. It's just a bunch of termites holding hands. If you want to back out of the contract, you can, as long as it's within the time periods that's set forth in the contract about your inspection period. A lot of times it's 10 days. It could be negotiated to be less or more. So if you do the inspection, you're like, oh, I didn't know what I was getting myself into. I'm concerned about the condition of the house. Well, as long as you're within your proper time frames, you could then back out and get your binder deposit back. Now, you'll be out the money you spent hiring a home inspector, because that's you just paying that person for the service, but you would get that binder deposit back in that situation. Let's say that you do the home inspection, it's great, you move forward. Or you do the home inspection, there's some repairs, you're like, I want to buy the house, but I'd like these repairs done. Then we could try to negotiate with the seller to do the repairs. And if those negotiations work out, then you move on to the next step, would be the appraisal. Especially if you're getting a mortgage, an appraisal is required. So while the inspection is letting you know more about the condition of the home, the appraisal is evaluating the value of the home. And it's good for you to know, but it's also necessary for the lender. If they're going to lend you the money, this is their way of confirming that it's a good investment and that you're not buying the house for way more than it's worth or something like that. Let's say the appraisal comes in low. Now again, when we made the offer, we looked at some initial comps to see if we thought it made sense to be a good offer. It's not 100% guarantee that the appraiser is going to agree. Matter of fact, there's been situations when, say, the appraiser didn't count a Florida room as square footage to the house, or for some reason that they had a difference of opinion about something, and that's affected the appraisal. That's a possibility. And so if the appraisal comes in low, then and if the lender's like, hey, we're not going to lend you the money on this house, the deal falls apart, well, the contract is not going to hold that against you as long as that's in as a contingency in your contract. And again, you'll get your binder deposit back in that scenario as long as you're within your proper time frames. Now, that being said, you would be out the money you spent hiring a home inspector. You would be out the money you spent hiring an appraiser because you paid for those services, but you would get that binder deposit back in that situation within the proper time frames of your contract. Now, if the appraisal comes in low, you could certainly go to the seller and say, listen, the appraisal came in $2,000 low, $5,000 low, $20,000, $30,000 low. For us to go forward, we're going to need you to lower the purchase price to the appraised value. And then it's up to the seller and you. If the seller comes to agreement, great. And then also I've been in situations where the buyer thought that it was worth more value than the appraiser did, and the appraisal came in a little low, and where the buyer actually agreed to kick in extra money to make it work on their end as well with the lender. So there's different options there, but that appraisal contingency is to verify the value. Let's say you get through the inspection period, you get through the appraisal period, everything's going good. You're going to keep on working on the loan processing. You're going to be working with your lender, getting them all the documents that they request, whether it's bank statements usually, tax information, maybe a letter from your job or this or that. Whatever they're asking you for, the quicker you get it, the quicker the loan processing can happen. I always try to suggest for my customers to get things in ahead of time. So if they say, hey, try to get this into me by next week, I say, hey, let's get it to them this week. We want to be ahead of schedule so that their loan processors can be working on our file to help us get to closing as quickly as possible. We get through all that. The lender finally says, hey, the loan has final loan approval. You're clear to close. Clear to close means there's no more conditions and we can get going to closing. Hopefully a couple days before you'll get notice of what your final closing costs and down payment is from your lender, and verifying what you need to bring to closing or what you don't need to bring to closing. And then we get to closing. If you do have closing costs or down payment requirement, you will have either brought in a certified check for those funds or wired them ahead of time to the title company, depending on what the requirement is from the title company. Then we get to closing, got a bunch of documents to sign, and the title company will usually help walk you through those documents and kind of summarize things and answer questions. And then after all the documents are signed by the buyer and the seller, after all the funds clear, your funds come in from your down payment, funds come in from the lender, they all hit the title company's account, then it's cleared, and then the closing's done, and then usually that's when you're going to get the keys. It could be different circumstances sometimes where there's an upfront agreement between the buyer and seller about the seller occupying longer, but typically that's when you get the keys, and it's a happy day. And so that's a quick version of the home buying process. Over 10 years into this business, I know that every single transaction is different, so that certainly differences can be in your situation. That's a general outline, and I also help walk my customers through every step of this process and help them with juggling all the different contacts that we have to be involved with through that process. There's other agents, there's buyers and sellers, there's inspectors, there's appraisers, there's title companies, there's surveyors, sometimes there's contractors, and many times other people that are involved in bringing a transaction together. My job as the real estate agent is to try to keep everybody on the same target and make sure that all the moving pieces are happening the way that they're supposed to. That's my goal when I'm working. So if you have any other questions, let me know, and I look forward to working with you on your next purchase or sale of real estate.